Yesterday, in our coverage of First Quantum Mining's business, we said it was a terrible time to be a copper producer. But maybe it was an operator issue after all, because Teck Resources on Thursday morning posted their first quarter financial results. And quite frankly, they seem to be doing better than ever. Yeah, revenue may be down from the fourth quarter, but pretty well everything else is up, suggesting the operation overall is getting leaner, which in this environment isn't a bad thing. Let's dive in. Teck Resources in the first quarter of 2025 posted top-line revenue of $2.3 billion, which was a 41% improvement on a year-over-year basis from the $1.6 billion reported in the first quarter of 2024. Although it represented a decline from $2.8 billion on a quarter-over-quarter basis, the increase was credited to higher base metal prices, increased concentrate sales, and the weak Canadian dollar. Gross profit, meanwhile, moved from $169 to $536 million year over year, which before depreciation and amortization rose from $497 to $929 million. Q4, meanwhile, recorded gross profit of $542 million, which grew to $1.1 billion once depreciation and amortization was backed out, which really isn't a whole lot higher here given the revenue difference. Profit from continuing operations improved from negative $125 million, or a loss of 24 cents per share in the year-ago period, to positive $370 million, or 74 cents per share in the first quarter of 2025, but was down slightly from $385 million, or 75 cents per share on a sequential basis. Adjusted profit from continuing operations, meanwhile, improved from negative $6 million, or 1 cent per share, to positive $303 million, or 60 cents per share, which was also an improvement over the $232 million, or 45 cents per share, recorded in Q4. Adjusted EBITDA, meanwhile, improved from $409 million in Q1 of 2024 and $835 million in the fourth quarter to rise to $927 million in the first quarter. And the part of the news they don't have in their news release is that cash flow from operations was negative $515 million in Q1 versus $42 million in the year-ago period and $1.3 billion in the fourth quarter. But to be fair, that figure includes $630 million in taxes paid to the Canadian government in relation to the sale of the steelmaking coal business, excluding which cash flows improved to $113 million. Teck, as of April 23rd, has $5.8 billion in cash amid total liquidity of $10 billion, which is down from a cash position of $7.1 billion and total liquidity of $11.3 billion as of the start of the year. Net cash as of the quarter end was $764 million, which was a dramatic decline from the $2.1 billion as of the start of the year. With that being said, $505 million has been spent year to date on share buybacks, with the current program seeing $1.75 billion out of a planned $3.25 billion spent, while dividend payments in the first quarter totaled $63 million. Despite being a major producer, when it comes to production data, Teck is rather guarded on their results, opting to include little detail within their associated news release. So we went to the filings. Production in the first quarter totaled 106,000 tons of copper, which was a 7% improvement year over year, while zinc concentrate production totaled 137,000 tons, a 14% decline. The latter was a result of lower ore grade and recoveries at the Red Dog mine, which is said to be in line with the mine plan. Refined zinc, meanwhile, saw production of 58,000 tons. The copper segment as a whole saw total cash unit costs of $2.48 per pound, down from $2.58 a pound in the first quarter of 2024, while net cash unit costs dropped from $2.36 to $2.04 per pound. Guidance for 2025 currently calls for net cash unit costs to be within a range of $1.65 to $1.95 per pound of copper. And while Teck says that figure is currently unchanged, they do expect costs to come in at the high end of that guidance. The zinc segment comparatively saw total cash unit costs of 61 cents per pound, down from 68 cents per pound in Q1 of 2024. Net cash unit costs per pound of zinc produced decreased as well, falling from 67 cents to 59 cents per pound. Guidance, which is currently unchanged, is calling for net cash unit costs of between 45 cents and 55 cents per pound of zinc. Teck also provided an update for Quebrada Blanca, which for simplicity's sake they refer to as QB. Optimization and debottlenecking is continuing at the mine, where Teck estimates that throughput can be increased by a further 15 to 25% at an attributable capital cost of $100 to $200 million. Ramp up during the first quarter is said to have continued, with the mine producing 42,000 tons of copper, which is down substantially from 61,000 tons in Q4. Production is said to have been impacted by an 18-day shutdown in January related to maintenance, as well as a shutdown in February related to a nationwide power outage that lasted several days. And to add to it, weather impacted material movement for planned tailings lifts, which reduced utilization and production, which as a result has caused the need for planned maintenance shutdowns in Q2 and Q3 to complete development work. Excluding this downtime, the average daily plant throughput is said to have increased on a quarter-over-quarter basis, but specifics weren't provided. Production guidance for the mine in 2025 remains unchanged, with QB still expected to deliver 230 to 270,000 tons of copper this year, alongside 3 to 4,500 tons of molybdenum. Costing guidance is also unchanged, with net cash unit costs expected to be between $1.80 to $2.15 a pound. All right, so let's wrap it up. Overall, the financials presented here by Teck are certainly better than peers, even if they took a one-time cash flow hit related to some asset sales. And it gives some hope for the copper industry overall, at least compared to what we saw reported on Wednesday. But that's the mining industry for you. All right, everybody, we are in the thick of earnings season. If there's stories you want us to cover, let us know in the comments section. Also, if you enjoyed this content, please give it a like, give it a share. If you haven't already, subscribe. We appreciate all the engagement we get. We're firing on all cylinders again. So guys, thanks for taking the time to watch this video.